Hi everyone, I'm Sam. I'm a Bitcoin research analyst at River Financial, which is a US-based Bitcoin-focused company. I recently authored this report on what could Bitcoin mining look like at 1 zettahash. And it's 35 pages, which is not for everyone. Not everyone enjoys reading that much, even if there's lots of visuals in there. So I figured why not try to make a video format out of the report and see if people enjoy that, if they like a more visual or at least an audio version, if they don't want to watch the whole thing. But let me know what you think. If people like these, then I'm happy to do more of them in the future to sort of give an alternative format to the sort of traditional PDF that people have seen plenty of in their lifetimes. Not that people don't watch a lot of video, but hey. So getting into the report itself, as mentioned, it's about 35 pages with a disclaimer at the end. Lots of visuals as mentioned, so I'm hoping to show you, or I'm planning to show you a lot of these in the video as well. And not have too much heavy text in there, as I'll just be narrating it and explaining you sort of how we got to the reasoning behind the report, what the insights are, etc. So bit of context on River itself and sort of why we decided to make this report. So River offers a mining product, a hosted mining product, to allow anyone, even if you don't have a lot of technical skills, to get into the mining space. So in essence, the customer ends up buying mining rigs. They have a contract with us, a hosting contract, where we take care of all of the maintenance. We make sure everything's set up and that it's running as much as possible, which is pretty important in mining to have a high uptime. And then people get paid out directly in the app through their account, etc. On a daily basis. So it makes it all very convenient without you having to get your hands dirty and constantly involved in trying to figure out how can I keep my costs low, how can I keep my uptime high, etc. So as like sort of from this position as River, we are very invested in the long-term success of the mining industry because we want it to succeed so that we can also, get more clients, help more people out, keep this thing going. And as a result, we were kind of interested in where is this going in the future? Like how is the mining space going to evolve, even though it's already been around for the past 10 years actually, with some of the stats here. Where initially you didn't even have the ASIC miners, the newest generation, so to speak. But people were just mining at home from their computers. And there's just been a tremendous evolution. If you look at all of the different optimal mining rig models that came out over the years, with a higher and higher hash rate, which I'll get into in a bit, higher and higher efficiency. So there's just been tremendous improvements ever since the first miners entered the market. And who knows where exactly that is going. What we've also seen, and I'll be moving the camera around a little bit here so you can also read some of the stuff underneath. But what you've also seen is that mining has grown to such a large industry that governments around the world are starting to take action. They're creating legal frameworks, they're creating laws to step in and sort of give their take on whether it's allowed or not, or where it's allowed, or what kind of energy source is allowed or not. And we've just been seeing this ramp up. We have an article on this as well on Bitcoin mining legality. We're just seeing more and more activity there where governments are speaking up because it's getting to a significant size. In general, I think like you can go through the article there as well. But in general, there aren't a lot of reasons to ban it specifically. And most of the countries that have done so has just been like, oh yeah, it's been using a lot of energy. We have energy crises in general. So let's just ban anything where we feel like it's not an immediate need. We also see a lot of countries that are more constructive about it. And some of them, they come from the angle of we want all of Bitcoin mining to be sourced by renewable energy, etc. So there's lots of different takes in there. It's an interesting topic to dive into, but not really the focus of the report necessarily. But just wanted to have it mentioned, like that's how big it's getting, that governments are starting to get involved. So what we've also seen is that a vast majority of the Bitcoin is now already out there in circulation. So it has been mined. We're currently around this area here, where around 19 million of all 21 million Bitcoins have been mined. So a lot of people look at this with the thought like, okay, like if so many Bitcoins have already been mined, then what's the point of still getting involved? Like haven't I sort of missed this early phase here where most of the Bitcoin could be mined? And what's important to remember there is that the price here, especially in the beginning, used to be completely negligible for a lot of people. And now it's actually starting to get to a higher and higher point. It's also becoming a more and more competitive industry. So I'm certainly not saying that everything is super easy and accessible and better than ever. It's definitely, the mining space can be challenging if you're on your own and you're inexperienced, etc. But it is certainly something that is still growing and that a lot of people are looking towards as these last Bitcoins that will be mined over time. There is a possibility, we don't know, this is no financial advice, etc., but there is a possibility they'll be worth significantly more than the Bitcoins that were mined early on, and obviously in many cases immediately sold to whoever wanted to buy them to pay off electricity costs. So what's interesting here, I think, is that a lot of the Bitcoin has been mined, but actually what we're starting to see is that there is this new wave of interest in mining that is coming, where energy providers and energy companies, etc., and a lot more entrepreneurs are starting to get involved as well, because they're seeing really interesting potential to start using Bitcoin mining in all kinds of new ways that weren't really done in these previous sort of 10 years or so, where mining was starting to emerge as an industry. So there's been a bit of an awakening, as I call it. Initially, you would just have entrepreneurs that were into Bitcoin mining, but now we're also starting to see energy providers that have become really interested in this. And why are they so interested? Because energy providers can use Bitcoin mining to help them balance energy grids, as we'll get into a little bit later on. They can use it to help us transition towards using more renewable energy, which sounds counterintuitive when you hear it at first. And it took me a bunch of time as well to really understand how energy grids work and why this is such an important tool to help energy grids to transition towards more renewable energy. And even doing crazy things like financing a reduction of methane emissions, which are incredibly harmful for the environment. But there aren't really a lot of financial incentives to go capture this gas and deal with it. So that's something where Bitcoin mining can play a role as well. And I'll happily explain you a little bit more about that later on. So what we're also seeing is that these climate activists and scientists, they're starting to pay attention to this. They're like, is this really happening? And in a lot of cases, like in denial about it, because it sounds so counterintuitive if you think about it, using energy, but actually using more energy, but that actually being good for the environment. It just seems strange, and it's sort of a difficult journey to get through to understand that, but I hope to make it more accessible for you today. It really is worth paying attention to, I believe. It's absolutely fascinating. One of the most interesting developments of our time, I think. So what am I going to cover in this video? What's a Zetahash? Because a lot of people hear that term, they may have heard of hashing before, but what exactly is the Zeta part of it? Bitcoin's hash rate history, so sort of how did we get to this point? The requirements to support a Zetahash will be important to get into as well, which is the security budget, mining equipment, and energy. And then I want to look into what I was just touching on, how Bitcoin mining can help the world, really important development, and hurdles to reaching a Zetahash, because they definitely exist. And it's not all perfect and easy and everything will go by itself. So let's get into that. First off, the when is a Zetahash going to happen question. So a hash itself, for those who aren't familiar with hashing, I would recommend you to pause the video and just read a basic explainer of what hashing is. It's a form of cryptography, and it's a way that the Bitcoin network uses to secure itself. It's a tool essentially to help it secure itself. So what the Bitcoin network is doing, what all these mining rigs are doing, is they are hashing. So they are essentially running these, people like to call them complex calculations, but it's an algorithm that converts data into a specific string of numbers and letters. And with a single computer, you can do about 1 million of these per second. So that's where Bitcoin mining sort of started out with the first mining computers, which were just regular computers. They could do about 1 million calculations per second to try to mine the next block in the blockchain. Now, after about 1.5 years, the network had grown significantly and first reached 1 billion hashes per second. So that's a gigahash. And you keep seeing all of these steps sort of year or 2 years later, etc., where we made the next jump in an order of magnitude to get to a terahash, a petahash, an exahash. And then now the big question is, when do we get to a zettahash? And it's not going to be a jump like this, I can already tell you. It's not going to be in a year or two. This will likely take significantly more time. Now, what's also important to note, and just a general disclaimer for the entire report, Bitcoin doesn't need to reach zettahash in order to succeed necessarily. So this is not some kind of goal that we must reach or Bitcoin will fail. It's really just a way of picking a point of time in the future and looking at what Bitcoin mining might look like then. And this seemed a creative angle to do that, rather than to just say, what does it look like in 10 years from now? I figured think in Bitcoin terms. Let's think of the next milestone in terms of hashing, and that is a zettahash. So one thing that's really important to clear up as well, like why does a network even need more miners in general? It's not about getting faster blocks or more transactions on the blockchain. That's never been the point of increasing the number of miners and increasing the amount of power that's put into the network. The reason why there are more miners sort of needed in general, or why you would want more miners, is because this increases the security of the network. Miners aren't spending all of that energy to confirm transactions. They're spending energy to secure the entire history of transactions that has been made. So this is why there's often very unfair comparisons in the media where people say, oh, a single Visa or MasterCard transaction only takes so many watts. But actually, with every Bitcoin transaction, which are part of a block of transactions, at the same time, the entire history of transactions is sort of re-secured every single time. So that's a completely different model, and as a result, not really a fair comparison, because all of these financial companies, they also run massive databases behind the scenes. They have all of their employees drive to work in their gasoline cars every day. There's just tremendous costs involved in running these businesses, and you can't just really say this is how much energy was spent. So really important to remember, more miners is about more security, because you want more honest actors in the network. That makes it really difficult to attack for anyone who wants to try to cheat the system. So Bitcoin's hash rate history, let's get into that a little bit. Now, we've made this graph that sort of shows the evolution over time here. So in the early years, as I already mentioned, you just had the regular computers. Then GPU mining, so with graphic cards, started taking over, which up until recently was still used quite frequently in other cryptocurrencies, but has since sort of taken a dive. And then over here, there was a brief period with FPGA miners, which were sort of multi-purpose miners that could do all kinds of different algorithms. But then we saw the emergence of the first ASICs, which are computers that are optimal for mining one specific thing. Or in general, an ASIC is just a computer that is really good at one specific thing. So you can think of it like an athlete that devotes their entire career to one specific sport and are incredibly good at that, but not necessarily great at every single sport out there. So that's sort of what the ASIC is. And as a result, it's really hard to compete with an ASIC if you just have a regular computer, because that ASIC is specifically designed to calculate as many hashes as possible. So these ASICs, they started getting more and more efficient over time. They started creating smaller and smaller chips, sort of more and more dense chips, so to speak, with more transistors in there, up until where we are now, where we are in the exahash range. And the zettahash range, that's still a while out, as mentioned. So Bitcoin's hash rate itself, what's kind of funny, if you look at this previous graph that I just showed here, all of this stuff, like essentially everything under an exahash, so everything under this mark is not visible on this graph at all. Like it's just not there. And this gives you an idea of how tremendously the number of calculations per second, the number of hashes per second has grown over the past decade. So we're now somewhere around 250 exahashes per second. Anyways, at the time I was making the report, now a week or two ago, I think. So what's immediately standing out here is this big dip here in 2021. And this is when China banned Bitcoin mining, which was a pretty big event in the industry. Or rather, China tried to ban Bitcoin mining, as we'll get into a bit later on, because they didn't quite succeed. But this is really something that stands out if you look at the graph, because there was a pretty linear growth trajectory there, and then all of a sudden that really big dip, which it did recover from. So other than that, it's been a fairly linear growth rate ever since about 2017. And if you would extrapolate this, then you might get to an exahash, a zettahash eventually. So if we start plotting that out a little bit, if you take as a starting point 2016, for example, which is when we really started seeing the hash rate grow significantly, sort of in the exahash range. If you draw that line and you continue to grow at the rate that Bitcoin's hash rate grew on average since 2016, then you would get to one zettahash around 2040 what is that, like 2046, 2045, 2046 or so. So that's a while away. But of course, Bitcoin's hash rate started growing a bit faster than that. So if you then take 2017, I'll move this over here because we'll need it. So if we take 2017, then we start reaching it a bit sooner. And every year like this, it sort of jumps forward by a bit. 2020 was a bit of an outlier, it was a bit slower then, but 2021 here, the rate at which the hash rate was increasing despite that dip was so much faster that we could already reach a zettahash at that rate by 2035. So that's in about 12 years from now. And 2022 was even faster, so 2032, almost 2033 there. So that gives you a bit of an idea. If we continue to grow at the current rate, then maybe we'll get there in about 10 years. It could be that it's faster as well. This is no guarantee. It's really just a trend line based on past performance. But it is still interesting to get an idea of how fast could it potentially grow. But there's a lot of things that need to support this kind of growth, which is what we get into in the report. So the first one there that I want to talk about is the security budget. Now the security budget is, in essence, it's the money that we have to protect Bitcoin against internal and external attacks. That's sort of the short version of saying it. In practice, this budget is generated through block rewards. So every block that gets added to the blockchain has a number of Bitcoin in it that is earned by whoever was lucky enough to add that block to the blockchain by finding the right hash. And then they also get the transaction fees for the transactions that were included in this block. Now, there's a certain ratio there, which is the gold line, like how much of the block reward comes from how much of the overall reward comes from the block reward, so what is fixed in there in the block, and how much is from fees. And the fee number, it has been pretty low historically. 2017 was a bit of an outlier there where fees rose quite significantly as the blockchain started getting really full and a lot of companies were really inefficient with the block space, which has since improved a lot. But you can see here it peaked out around, what is this, like 14% or so of all of the money came from block rewards. But ever since, like, it's gone down quite a bit. Now in the future, I showed you that graph earlier with the 90 million Bitcoins mined. As there are more and more halvings where the block reward halves every 4 years, an increasing amount of the fees will, or of the money earned of the security budget will have to come from fees. So from the usage of Bitcoin, of people paying transaction fees. And we're also plotting out in this report exactly how much. But you can see here in 2022, about $9.5 billion-ish based on the average Bitcoin price over the year. So not the current one, but that's about the total security budget of that year. And the big questions that come up there are like, is that enough? Like, should it be more or less, or what exactly is enough? And the difficult part about that is that we don't really know today. It is a difficult question to answer. What is enough of a security budget? There's a lot of analysis that needs to happen for that. So we only know that it needs to be enough to fend off large nation states that may want to attack Bitcoin for various reasons, like they feel like they're getting undermined. That's how big it should be. And you could say, well, these guys have lots of money, so that's a bit difficult, but there's a whole bunch of reasons why it's not as concerning as you might think, but definitely something to pay attention to. So an easy argument that comes up here is, why don't you compare the security budget to the way gold works? Now, gold has a market cap of about $11.9 trillion today. And from my understanding, if I look up what it costs to secure gold, you pay about 0.7% per year to put it in some kind of vault for some service. So that's not really self-custody. You could buy your own vault, but that has its own trade-offs as well. But if we take this number, then the gold security budget per year is about $83 billion. Quite a significant number. Now, the tricky part about this is if you compare Bitcoin to gold, there are a couple reasons why I think you can't really do that. You could, but the tricky part is that gold is not on a globally shared ledger like Bitcoin is that can be attacked at scale. So there is no way for you to attack gold in general across the world, which is a benefit that gold has, but it's also a trade-off in a way. Because gold also lacks some of the properties, such as the ability to easily transport it to anywhere in the world by it being on a global ledger. And that's a really appealing factor that makes well-funded actors like nation states feel attacked in some kind of way. They might feel undermined. So those are reasons why they might want to attack Bitcoin. And gold doesn't have those properties. So it's a different sort of set of trade-offs. There's not really any point in arguing for or against. But as a result, I think it's not quite as easy as saying, okay, we're just going to copy the security budget of gold and we're sure that we'll be fine, because we don't know for sure how much is going to be needed. And I believe a lot of studies will be needed there to get a bit of an idea of what is a good ratio there. Now, if we do take the 0.7% number for Bitcoin, then that would result in about $2.2 billion at the current market cap of $322 billion. So that's a bit lower, a bunch lower than where we are, not by a tremendous amount. But at the moment, we're sort of like we're overshooting that mark. But the question is this the mark or not? Or should it be a bit higher the way it currently is? So we don't know that yet, but it's definitely something that's really important to pay attention to for a bunch of reasons that I'm about to get into. So the balance is going to shift, as I already mentioned. This golden line will need to, or it will go up naturally because the block reward will start decreasing. And in essence, we need to figure out a way to still finance the security budget, even if the Bitcoin price doesn't necessarily rise tremendously, or if adoption isn't huge. We do need to have security, because otherwise your Bitcoins could be sort of like not your specific Bitcoins, but let's say the integrity of the ledger could be attacked by people with significant amounts of money and essentially hash power who want to ensure that they can double spend a transaction. That's sort of the main attack that's out there. That's not easy to pull off. It's incredibly difficult. Nobody's ever successfully done it as far as we're aware. And we would be aware, I think. And if such an attack would be successful, then that could undermine the faith that people have in Bitcoin in general, assuming it's not some kind of crazy outlier or something. So that's definitely something to pay attention to, not to give you too much concern, like, oh, is Bitcoin even secure in the future? Because it's been extremely secure so far. And as I just mentioned, the budget is potentially higher than it should be. But it's just something that people who are invested in this industry want to pay some attention to. How does this develop? What are the risks? What are the possibilities? And sort of take it from there. So don't get too worried if you're not as deep into Bitcoin yet. There's a lot of logical, well thought out arguments for and against. So what I did in the report was I started just doing some basic math. Can we take a couple of scenarios where we map out how does the Bitcoin price develop over the years? The Bitcoin number of Bitcoin transactions is typically pretty fixed because there's only so much space in the blockchain itself. And we're not counting the transactions in the additional layers there because the miners, they only care about the fees that are paid on the base chain. And then we also look at the median transaction fee. So what if we just take these numbers and take a look, where does this get us in, say, 20 years from now, in 2042? So if the average or the median transaction fee, or average, whatever you want to take, if that stays the same as it is now, the number of transactions stays the same, and the median Bitcoin price remains the same, then by 2042, Bitcoin's security budget would be $446 million per year. And that would be a reduction of 95.3% compared to what it is now. Now that's a really big jump. And that might scare a lot of people who never really did the math before. But this is essentially a scenario where there is no additional Bitcoin adoption whatsoever in 20 years. That would seem unlikely, but it is a possibility. It's something worth considering. And then you see what the outcome of that is. And that's purely due to the block reward halving, but people not really using it much more and paying a lot more transaction fees, and the price not really moving. Now you might say these halvings that occur, they would inevitably push the price up, but we don't know that for sure either. So just putting it out there as a possible scenario, I think it's unlikely, but worth considering. So what if the hash rate, if it would 4x to get to 1 zettahash from where it is today, what if we did the same to the price? So people don't really use it much more either than today, but the price does go up a good bit. So it's more of a store of value rather than a medium of exchange. If that were to happen, the Bitcoin security budget would still shrink to $1.2 billion in 20 years from now. That would still be a reduction of 87%. So what I'm trying to say with this is if just the price increased, but adoption didn't really increase, we would still end up with a smaller security budget than we are today. And this would not, I believe, hit the 0.7% mark I mentioned earlier. So a bit more might be needed there. But this is something really important to be aware of, I think. That it's not just a matter of hodl and it's all going to work out eventually. In essence, we would want Bitcoin to get to more adoption and to sort of see this number of the transaction fee go up. and people settle transactions on the blockchain, and then, like, I'm sort of getting ahead here, but use the Lightning Network for payments, for example, or any additional scaling layer, and those transactions just get settled on the blockchain. I'll get more into that later on, getting a bit ahead here. So if we sort of make a graph of this scenario, then it would look like this, where if we want a hypothetical scenario, so this is not how it's going to play out, nobody knows, but the transaction fee would remain the same, then this is sort of how the Bitcoin price would evolve. And as you can see here, this is that graph from earlier of the supply of Bitcoins getting mined. That's not really going to increase much anymore. So every 4 years, there needs to be this jump up, a jump up in the price in order to maintain the same security budget that we had in 2022. So at the end here, you get towards $1 million per Bitcoin. That might seem crazy to some people, and others might find it too low. Entirely possible if it's only $1 million in 20 years, because we also don't know what inflation will do, obviously. But this gives you an idea. If only the price would move, but the transaction fee would not, this is how high the price would need to get to keep us at that budget. So that's quite the increase. Now, there's this alternative scenario where the price would increase, but also the fee would increase. So instead of keeping that sort of unrealistic, so to speak, $1.50 per transaction, which again, it's not something every user would have to pay for every single transaction. It might be something a lot of users in aggregate end up paying behind the scenes. So if you use those two factors, so the average transaction fee and the Bitcoin price, then here you can see you get to about $450,000 on the graph per Bitcoin. And then the average transaction fee here would be about $50. And of course, the average transaction, it might just pay a few cents to settle thousands or millions of transactions in one go on the blockchain. So in that case, that's sort of how high we need to get to maintain that similar security budget. So again, that's a pretty steep increase as well, but something important to consider. Now, the big question is then, like, could fees actually raise that much? Could they even go to such numbers? And in order for that to happen, I was already mentioning the blockchain will need to transition from a payments layer to a settlement layer, which it isn't entirely today, but it's already starting to emerge a bit. So Satoshi Nakamoto actually foresaw this transition in the early years of Bitcoin, sent this email in private to a Bitcoin developer at the time. And in this email, Satoshi suggested this kind of protocol, this kind of way of working, of using a feature, and lock time is what it was called in this case, in order to do high frequency trades between a set of parties. And that is what people can do on the Lightning Network today as well, where essentially all of the intermediate transactions that happen, they don't have to be sent around the entire network and settled on the blockchain every single time. Only the final outcome is recorded on the network. And we have this live today because in 2016, I believe, Joseph Poon and Taj Triya suggested the first implementation of such a solution called the Lightning Network. It has been live for quite a while. We made a report on it as well back in October. As we are, as River, we are one of the largest participants in the Lightning Network by some metrics anyway. And the Lightning Network is one way to help Bitcoin scale and for the blockchain to become a settlement layer. It's not the only solution. It doesn't solve everything. It's not perfect yet, but it is the best that we have so far, and it's already being used quite significantly in a meaningful way. So that's definitely something, if you're interested in this, sort of seeing how can Bitcoin scale, take a look at the report, read up a little bit on the Lightning Network, and just try it out as well with a little bit of money, with a basic wallet, and see what you can do on there. It's a really exciting development. So what we also have, in addition to the security budget that I mentioned that's generated from miners, there's also this thing called the extended security budget. It's not really an official term, but I'm just calling it this to help get the point across. In essence, there are developers for Bitcoin, but nobody is like, there's no company, there's no Bitcoin the company, which is one of the things that makes it so amazing. On the flip side, if we want people to work on this stuff, they do need to be financed. So where does that money come from? It's not the miners who say, okay, we're just going to give X% of the block reward to developers to ensure that we always have people who keep improving the network. This needs to come from somewhere. And what we're typically seeing is that these contributors, they are either independent, so they just raise funds from the community. Some of them were early investors in Bitcoin and might have had some savings that way, but definitely not all of them, and new developers keep coming in all the time. And we're also seeing organizations that help with developer funding. We're seeing companies as well that are like just putting a developer on the payroll essentially, that can just work on whatever they like, no strings attached. But there's a lot of companies that have made a lot of money from Bitcoin in general, from it existing, from this industry emerging, from all of the trading fees, etc. And they have an interest as well in keeping this industry going. So if none of these companies would fund developers, then there is a risk that there's not enough people watching or improving Bitcoin, and that it wouldn't get to where it could potentially be. So for them, it's a bit of an investment in the future as well. But this budget also exists. It's not just what comes out of the blocks. Of course, this is much smaller than the block rewards and sort of the revenue generated by mining. But it is still worth mentioning that if Bitcoin was ever under serious attack, then all of the participants in the network would have incentives to help secure it, to keep it decentralized and to keep it running. So it is a metric that is worth paying attention to. So then sort of the question of this chapter in overall is like, does the security budget that we have, does it support a Zetahash? And the answer is, well, maybe. We don't really have a guarantee yet that it's going to be enough. A lot of studies need to be done here to understand what is the ratio there that we need, or what is sort of the budget that we need to protect against even the worst imaginable attacks that might be out there, because that is how Bitcoin is strong and that is how it continues to thrive over the years. Now, next chapter, mining equipment. So obviously, Bitcoin mining works through physical hardware in combination with software. And in this chapter, we look a bit at, is there some kind of limitation in the hardware that needs to be produced for us to get at that Zetahash? And of course, if you throw a lot of money at stuff, you can make almost anything happen. But as mentioned in the previous chapter, there is a security budget. There is an amount of money that miners earn. And if this is not enough to pay for all of that equipment, then we wouldn't be able to get to a Zetahash. So diving into that a little bit. So first off, I had to ask the question, how many active mining rigs are there even? How many of those ASICs are there out there around the world? And it's really difficult to get this data because it's so incredibly decentralized. It's not like there is some website where you can look up how many miners everyone has. That just doesn't exist. So you have to make estimations. Now, as I mentioned before, there is this rate at which the mining rigs calculate that varies per model, obviously. And then there is the total hash rate. That one we do know. We can sort of derive it from how fast blocks are being produced and what the current difficulty is in the software. So if the network currently has about 250 exahash per second, then you can divide that total number by the hash rate of an average mining rig. So if you say, well, the average mining rig, I think it has about 100 terahashes per second, then there would be 2.5 million active mining rigs today. If you think like the average is only 50 terahashes per second, then there would be 5 million. So by sort of making this overview, you can get an idea, like maybe there are between 1.7 and 5 million mining rigs in total, but that's a really broad estimate. And there are some factors that we can use to get a bit closer. So we can look at how much power demand does the Bitcoin network currently use. And the Cambridge Center for Alternative Finance, they have a really nice website where they keep an overview of sort of how much energy Bitcoin uses over time, what the consumption is in terawatt hours, and the sort of power demand in gigawatts, the GW there. So at the time when I looked at their data on the 23rd of November, it was about 9.22 gigawatts, or about 80.8 terawatt hours, to get to that 250 exahashes per second. So if we take that number and you divide it by the middle of that range I mentioned earlier, so about 3.75 million ASICs, then you would get to about 2,459 watts per mining rig. And that is about 66 terahashes per second per ASIC. Now, if you look at the modern mining rigs that are out there, they do a lot more than this. And as we saw earlier in those graphs, the hash rate has been growing a lot over the past year or two. So most of the new mining rigs actually came online during those years. So it's unlikely that they would be using models from like 5 years ago or something to put online then. It's more likely going to be new ones. So this number just seemed too high. It seems like there couldn't be 3.75 million active mining rigs today. So what if we take the average hash rate of a modern mining rig, the average power draw of a modern mining rig of 3,250 watts. If you take that number, then you get to about 2.8 million active mining rigs, and the average hash rate there would need to be about 89 terahashes per second per ASIC. And that's actually a much closer number to what you'd expect in reality. It could be that it's a little bit higher still, the terahashes per second, so there would be a little bit less mining rigs than that. But this gives a pretty good idea of sort of the number where we might be at, somewhere between 2.5 and 3 million mining rigs out there. And there are, of course, also people who are able to mine at a loss or who pay no energy costs at all, so they can just keep any kind of mining rig running, really. But that's not going to be the vast majority of the miners out there. So this gives us a first idea. Now, what if we would then take the number of mining rigs and we want to get to that 1 zettahash from where we are today, without there being any improvements in the efficiency per mining rig? That's a really important one to explain for this specific example, because it's not really a realistic scenario. So if we have 2.8 million ASICs and we need to get to 1 zettahash, so times 4, 11.2 million ASICs. That's the job. Now, if let's say the average mining rig was $4,000, that's just like an arbitrary number. We could say $3,000 as well, but we're looking at like $44 billion, or it could be $36 billion or 24, really depending on the price there, which may fluctuate depending on supply and demand. But it gives you a bit of an idea of how much money is needed to pay for all of that. And if we're looking at a security budget every year, or rather the revenue that's generated, because it's not all profit, miners have a lot of electricity costs as well. But if we look at least at the revenue of $9.5 billion this year, then paying all this equipment, if maybe the costs are $9 billion, for example, we don't know, or maybe it's $5 billion. I don't really have any good estimates there. But that would take a significant amount of time to pay for all of that equipment. So that would be pretty tricky. Now, fortunately, if efficiency improvements are a thing. So as I showed before, mining rigs have become far more efficient over the past decade. So in the past 4 years, they've become about 110% more efficient than they were before. And the hash rate per mining rig has grown significantly as well. So that efficiency is measured in how many watts do you have to use, how much energy do you have to use to calculate a trillion hashes per second, a terahash. So that's how in Bitcoin mining efficiency is measured. So you can see there's been a tremendous improvement there. There are less watts needed now, only about a third of what you needed in the past to get to a trillion hashes per second in just 4 years' time. So if this continues to go on, then we need less and less energy to calculate more and more hashes. So we can plot this out. If you then take the 250 exahashes per second in 2022, around here, and what if we assume about 3.6% yearly growth rate in hash rate per rig, which is what it has historically been over the past years. And then we also take the total number of active mining rigs. Let's say it grows at the same rate as the efficiency per mining rig. Just as an example to show you the discrepancy there. So if we wouldn't have efficiency improvements, we would get to 11.2 million ASICs. That would be at this point here. So we'd be around here, which is a significant amount higher than we are in reality due to efficiency improvements. We really only get to about almost 5. So this is about 4.7 million here. So instead of the number of mining rigs growing by 300%, due to efficiency improvements, they would only need to grow by 67% if this was the growth rate in order for us to get to a zettahash. So that shows the efficiency improvements. They just save a lot of costs for the miners essentially. They ensure we don't need to put as many mining rigs live to grow the hash rate that much. So that's sort of the compounding power of innovation, of technological improvements. So the big question that we also ask in the report is the production of ASICs, is that some kind of bottleneck? Because there are a bunch of, like, let's say there are 3 to 4 major ASIC developers out there. And like, are they able to create millions of mining rigs over the next decades? And the short answer, like I don't dive into it too much in the video here because it's already pretty lengthy. Short answer is no. Longer answer, just see the report. We look into some financials of Canaan here, which is one of the publicly traded mining manufacturers, to see like would they have the budgets, do they have the R&D budgets in order to produce hundreds of thousands of miners every year? And the answer is yes, they can do this. It's not a problem. So mining equipment is certainly not a bottleneck to reach a Zetahash. It's just a matter of there being just enough money, which should be possible. Now, the third one here, the final of the requirements, energy. And this is, to me, one of the most interesting ones, probably also one of the most hotly debated ones out there. So let's first start at how much energy is actually being used globally. So we know up until 2021 for sure, 2022 still ongoing, but this is the number of terawatt hours per year in global energy consumption. So getting pretty close to 200,000 of those. And you can extrapolate that into the future. But again, that's just an extrapolation. We don't know what kind of breakthroughs happen in energy technology that would cause this to grow so much. There's certainly a lot of people in the world that would love to be able to use more energy, but can't afford it, or the infrastructure isn't there. So the real demand is way higher than what you're seeing here. But unfortunately for a lot of people in the world, not available. So there was this kind of expectation from a lot of mainstream alarmist behavior, saying that in 2020 here, Bitcoin mining will consume more power than the world does today. That's what they said in 2017. So this is a really easy clickbait kind of thing that you can show to people who don't really understand how mining works, how energy works, how any of it works really. But what's the reality? In 2022, Bitcoin mining used 0.05% of global energy consumption. And if you look back at that previous graph, it's not like there was a tremendous jump here between 2020 and 2022 or 2017. Like, it's pretty similar. So this is off by several orders of magnitude and basically just slandering the Bitcoin mining industry or Bitcoin in general. So it's really not using that much energy on a global scale. It is still a noteworthy number, but I think if everything that wasted so much energy got as much media attention as Bitcoin, the media might look quite different. So how much energy would Bitcoin use if it reached 1 Zetahash? We can look into that as well. So it depends on a few things. How many ASICs can run at least at break even, which is influenced by the security budget. The life cycle of a mining rig, are they competitive for a year, for 3 years, for 5 years, for 10 years? That of course depends on new innovations in mining technology, how big the margins are, etc. So that's a big factor there. And the rate at which ASICs become more energy efficient is important as well. So we can plot this out again, looking at, again, that number from before, which is based on how much has the hash rate per mining rig grown over the past years on average. So if we take that for the number of active mining rigs as well, this is just an arbitrary number, but let's say the hash rate or the number of active mining rigs grows by 3.6% per year. If we take that and we plot that out in terms of power demand as well. So again, like before, what if there are no efficiency improvements, which has never happened in Bitcoin's history, but let's assume the worst case scenario. Then the power demand would grow substantially as well, basically just in line with the hash rate itself. Now, if there were 3% yearly efficiency improvements, which is the rate at which Bitcoin mining rigs became more efficient in 2022, so that's sort of the latest model with 3% more efficient than the best model in 2021. So if we would take that rate, then we'd already end up like close to half of this, if this just happened every year on average. And if we look at the average over the past 5 years, that the average there is actually much higher because there were bigger jumps other than this year. So 32.8%. If that continued to be the rate, then the total power demand would actually decrease over time. Now, it's not very likely that mining efficiency would improve by this much every single year for the next 20 years, but it is a possibility to consider. And where exactly we end up between the red line and the green line, that remains to be seen, of course, or if any of those at all, because it could also be that the hash rate just grows faster and thus the power demand too. But there are a lot of factors, there are limitations out there on energy grids as well. This gives a bit of an idea of how might this play out in the future. And what's really important then is to pay attention to the numbers still. How much of the global energy demand is Bitcoin then using? In the worst case scenario, in this scenario, 0.15%. So that's still not 100% of the world's energy by a certain year, which is just not realistic. So these are still small numbers for sure. Now, what if we had a much more aggressive growth trajectory where instead of, in this previous case here, a Zhash was reached around, this is 2036 or so. In this case, if the hash rate grows more aggressively, we could reach it by like 2028 if we have 20% yearly growth in the number of active mining rigs. And in that case, power demand would also increase significantly alongside it again. If we then had 3% yearly efficiency improvements again, like in the previous scenario, there would be a bit chopped off. It's not a lot in this case, but because it's also like it's just less years. This is in 5 years from now, so it's hard to make a gigantic impact in such a short time frame. And then, of course, the more efficient scenario where we just get yearly efficiency improvements that are pretty significant, like they have been for the past 4 years, other than this last year, then we'd stay a good bit lower still. But of course, these are just arbitrary numbers. We don't know if we're going to see 20% more active mining rigs every year, because that really depends on how much money is there to be made through mining. So that gives you a bit of an idea, again, with the numbers, like how much of the global energy consumption would that be? It's still just small numbers. It's not anywhere near 100%. So is it realistic to see such an increase in energy supply? That is the big question here, like, because the demand might be there, but is the supply also there? So in order to understand that, we need to look into what is sort of happening, what trends are happening. This is a really great graph from Lancium. What trends are happening and how much does it cost to get all that hash rate online? And they have made a really good graph here of the hash rate value of an exahash, which has been trending downwards over time. So it's becoming worth less and less as time progresses. And in the future, like the amount of sort of money you can earn through an exahash is just going to keep decreasing over time. Now, what's really important to remember here is, where do Bitcoin miners actually operate today? What defines their profitability? So they're not going to be in areas that have energy scarcity, everything on the left here essentially, where you might have remote areas where there just isn't really energy generation, there's nothing to do there. Think of a tundra, a forest somewhere where there's nobody living there, a rocky area. But also cities with underdeveloped energy grids. Miners don't go there. There is no point in going to an area where there's energy shortages, outages, because you're just going to get into conflict with local authorities. And a lot of industrial areas as well, because there's a lot of energy demand there in general. They can be somewhat populated, but they're just not always the most appealing areas to do mining in. There are, of course, exceptions to the rule for all of these. But what we see is that Bitcoin miners are really interested and thrive in areas where there is energy abundance. So everywhere where there is more supply than demand, where there is sort of waste energy that cannot be economically stored, because storage is really expensive, doesn't necessarily always solve all of the needs, isn't available everywhere, and just needs so many decades to get to the point where it can serve all of our energy needs, that we need a solution now, essentially. So Bitcoin miners thrive in those kind of areas, in cities with surplus energy on their grids during off-peak hours. So understanding that is pretty tricky, but in essence, when you have renewable energy, it needs to be generated somewhere, like just when the sun is shining, when the water is flowing, when the wind is blowing. But that's not necessarily always at the time when you at home with your family need the energy, which typically everyone does around the same hours. Like there's a peak demand in the evening, for example, around dinner, when all of the machinery goes on. People are all at home watching their TV, charging their cars, etc. So that creates a really big load on the energy grid. But a lot of the solar energy is generated during the day, for example, and a lot of the wind energy at night. So not at those hours and times. So we'd need massive amounts of batteries everywhere that would just be immensely expensive, and we just don't have the supply available anywhere near it at the moment. So we need so many solutions to support more renewable energy production that we just can't operate our energy grids this way. So where Bitcoin mining can help is to sort of lower the costs there by taking the surplus energy that can't just be thrown away or wasted or sit there. It must be consumed or our energy grids become unstable. So Bitcoin miners can take off some of that. That in turn saves a lot of costs for the energy company, and thus they can charge the consumer lower prices as well. So this is sort of where Bitcoin mining can come in. And you could say, well, there are other solutions for this as well, and there are, but we'll get into that in a little bit. Bitcoin mining is the perfect customer to help energy grids do this. And what we also see is that rural areas with a lot of renewable energy, that's where Bitcoin mining has historically been really popular. In China, for example, a lot of the mining was, or a bunch was done with coal historically, but also a really large amount with hydro energy in areas with a lot of hydro dams where there was just a lot of abundance and they didn't really have any other use for all of that energy. And what we also saw, like I mentioned, the fossil fuels there, but what we're also seeing now is vented methane gas. Sources that are far from pipelines, and that vented methane gas needs to be kept out of the atmosphere. That's becoming a really interesting source of energy. But this gives you an idea of where Bitcoin miners operate. They don't go to these areas. They don't drive up the energy prices for the average consumer because they cannot be competitive if they operate in an area where their costs are too high. They cannot pay the electricity costs of an average consumer because they get outcompeted by people who are paying almost nothing. So that's a really important part to keep in mind there. So what we're also starting to see is that miners are getting more creative to generate revenue. They're not just getting revenue anymore from block rewards and from transaction fees. They're starting to integrate mining into all kinds of industries because miners generate heat. They're constantly running 24/7. Mining rigs get really hot. So here's an example from the Netherlands where this factory here, they grow tulips and they put these mining rigs in the greenhouse to generate heat and to help the flowers grow that way. So that's just one clever way, and there are dozens of examples you can come up with. There's people using Bitcoin miners with their, like in this case here, I believe this is for whiskey. There's also some that are using it to dry wood for industrial use. So there's lots of different reasons why we need heat in the world. And if we start integrating these things, you can generate extra revenue there to help pay for the costs and essentially make a profit still. So we're seeing a lot of evolving things there. So the big question is then, is there enough cheap energy out there to support a zettahash? And that's going to involve a bit of science. So let's dive into the numbers there. So how can Bitcoin mining help the world? That's sort of what this topic revolves around, and I've sort of hinted at it already with the methane gas. Because if we look at the cheapest energy on the planet, there's been a really important trend where renewable energies have started to become cheaper than some fossil fuels in some cases and places, etc. This is not a universal statement, but in general, it's become cheaper and more accessible. But if you see battery storage there, it's still far, far above the other sources. So it's just really expensive for a lot of people. There have been a lot of leaps there, but still a lot of progress to be made, which could take another decade for all we know before we get there. There are no guarantees there. So the cheapest energy on the planet is actually listed here, but it's not listed as the cheapest because this is gas in general. But I mentioned methane gas there. So vented methane gas, that's just like sort of let go into the atmosphere, is almost free if you can capture it. That's the tricky part. And why would you want to capture it? Because methane gas is 84 times worse for the environment than carbon dioxide. So it's responsible for at least 25% of today's global warming. Is driven by methane from human actions. That's a really big amount, and it's literally just gas that's leaking into the atmosphere. And where is that leaking? Just from landfill, so where all the trash is brought and it's just sitting there and I don't know the right English term for it, fermenting in some kind of way. It's just letting go of all of that. A lot of it comes from just cows and goats. I believe it's from burping. Just in general, cattle generates a lot of methane as well. But there's a bunch of different sources for it, and this company here, Vespine Energy, they're a big proponent of using this methane gas for mining. So how exactly does that work? So in the US alone, as an example, there are 2,633 landfills. And out of those, only 538 have active energy projects, which are listed on this map here, which I believe source is from the government. So to give you an idea there, that means most of them don't have any active projects, and by the time they'll have active projects, like, you know, so much methane will have leaked into the atmosphere. So we need solutions, and we need them fast. So often counter arguments come up with, oh, but can we do alternative things with methane, etc., to try to get the solutions fast? And it's a lot of talk, but ultimately action also needs to happen. So what typically happens when methane is captured? It is flared. I didn't mention earlier, but methane is also a big byproduct of oil extraction, gas extraction. And people can say we need to get rid of that too. But again, as mentioned earlier, it's really hard to have an energy grid that only relies on renewable energy, because there is just peak demand and there are troughs as well where there just isn't much demand. So the more energy we want, the more we need to essentially support it as well and make sure that it's always available. So captured methane is often flared, so literally just burned. So these images, they often use them for dramatic reasons related to climate change, where you see these pictures like all this gas is being burned, and this is true, like it is a big problem. And the reason it's a big problem is there are no buyers where this is happening in a lot of cases. But it needs to be flared, so burned off and then turned into CO2 essentially. So that is still harmful for the environment, but a lot of the methane still leaks out anyway when you do this. So the tricky part is sort of how do we make this economically feasible, because this is a big cost for any sources where there is methane. If you're a landfill operator and you need to pay millions of dollars to capture methane gas, etc., like who is going to pay for that? And that's typically not really happening. Governments aren't paying for that, and thus it's just leaking into the atmosphere. And again, it's one of those questions of where does the money come from? Now, a lot of these sources where methane is being flared, for example, they are quite far away from existing gas pipelines. So it's not like we can just, instead of flaring it or venting it, we can just attach it to the existing pipelines and then consumers can use it or businesses can use it. It's typically in places where it's not connected. And building these pipelines, again, it can easily take a decade. It takes millions of dollars per kilometer to build those pipelines. So by the time we're done with that, a bit late, guys. That's not going to cut it. So a really large amount here can be used in different ways. And Bitcoin mining, as I mentioned earlier, is the ideal customer for this. So if you look at the different aspects that we essentially need to consume this methane gas and to capture it, we need something that's proven, that's always going to work at every single point in time. We need something that doesn't matter, that doesn't care where in the world this is located, like how far away from sort of civilization or from a city or at what elevation, or it needs to work in any given case. You can't just take a consumer of this methane gas that cannot operate in a lot of places. You could for some specific spots, but not everywhere. A really important one is that it needs to be interruptible. You cannot just put a steel plant next to a place like this and occasionally power it down because there isn't the methane gas or whatever. There's just a lot of costs involved in operating, even say a data center as an example here. You cannot just shut off a data center as a customer for this methane gas, because it's just going to be a problem for all of the people that are using this data center for their businesses, for their services. So that's not an option. It needs to be profitable. Nobody's going to capture all this methane gas and burn all of their money off and earn nothing in return. You need an incentive for people to go do that. It needs to be good for the environment in some way, and flaring is an example of something that isn't and what is currently done. And it needs to be scalable. We need to get to the size and scale where this can help solve this problem globally. And not everything addresses that problem either. And I'm covering grid electricity here as one of the items. But this is an overview from Daniel Batten. He's done a ton of research on this topic. I would highly recommend to go check out his website, and he's also reviewed the paper and given feedback on it as well. So just wanted to shout out to him there. So ironically, where are we at with Bitcoin mining today? It is too small of an industry to have a major impact on this methane gas issue. It needs to be about 1.5 zettahash, I believe, according to Daniel Batten's analysis, to start helping at a significant scale where we're really starting to reduce climate change. I believe the estimations are about 0.15 degrees Celsius could be reduced through Bitcoin mining, through using methane gas as a source of energy. So that's a really significant impact. It may not sound like much, but it's about 10% of the goal that has been set to reduce climate change by. So what if none of this works out? Like, it sounds really far-fetched for a lot of people. Like, okay, there's an economic incentive to go capture this methane gas, but people need to take action and go do it. And help the world in this way. But the tricky part is, like, what if it doesn't happen? What if there are too many hurdles? What are there too many blockers for people to get the licenses or to get the operations going? And what if none of it happens? Does that mean that Bitcoin mining then remains bad for the environment? Well, if we look at the numbers from the Bitcoin Mining Council, which aggregates a lot of data from the industry to see how much renewable energy is being used for Bitcoin mining, then you see that ever since about late 2021, about 57% of all Bitcoin mining is done with renewable energy, with sustainable energy. And Daniel Batten did a peer review of these numbers as well and arrived a few percent lower, I think like 3 or 5% lower than that or something. But his rate of growth was a bit faster than this. So essentially what we're seeing here is that every year it's increasing by about 1.7% more renewable energy. And if you compare this to the renewable energy mix of any given first world country even, or developing nation, or whatever you want to do, this is actually significantly higher, like 10 to 20 to 30 or even 40% higher than the average country out there. So that's a really big percentage that Bitcoin mining is being powered by sustainable energy relative to existing countries. So Bitcoin mining gets criticized for being dirty and using coal, etc., but all of our energy grids are powered largely by fossil fuels. So really important to be realistic there and look at the actual data. So if we project this trend out into the future, we go from about 59.4%, and then every year you add that 1.7%, then in roughly 20 years, Bitcoin mining would be almost entirely powered by sustainable energy. We're obviously not there yet. It could be that this grows faster, that the trend changes, that it flatlines, but still it's going to be far ahead of the average country because Bitcoin miners have that incentive to use the cheapest available energy out there, and that is increasingly becoming waste energy from renewable energy generation. So really important to understand that no matter what happens, it's going towards almost fully sustainable energy sourced. So this is what I was mentioning earlier. There's been this goal set to mitigate methane gas as an example, and to just in general achieve net zero, so where we are not emitting more greenhouse gases, etc. And in essence, we're sort of building towards a stable environment, climate. So Bitcoin mining can sort of help bridge that gap. And if we don't use Bitcoin mining as one of the tools, I'm not saying it is the tool, I'm not saying it's going to solve everything, but as one of the tools to accelerate the path that we're currently on, then we're going to fall massively short of the goal that is out there. So where we're trying to get is global energy generation in terawatt hours through renewable energy. So that's the point we need to get to, and we're just not getting close so far. This might be where we end up with the current trend. So we need to get this higher, and then we need Bitcoin mining to help bridge that gap by using oversupply, as I mentioned earlier, during off-peak hours. Because then people earn their money back quicker. The investments in setting up a new hydro dam instead of only servicing 10 villages in the vicinity, then all of these rural areas can earn back that hydro dam much quicker. So that means there will be more investments made in rural areas around the world in renewable energy projects to help those local communities to also switch to renewable energy rather than burning fossil fuels. So really important development there, and Bitcoin mining can help with this, as counterintuitive as it sounds. So what we're seeing is that without this, these kinds of customers that are really flexible and that can emerge and just take off any kind of energy load that is needed by just relocating really easily, by switching off at a moment's notice. We're seeing, for example, in the US that there's increasingly, year after year, there is more and more negatively priced energy. And that essentially means someone would pay you to take that energy because it is destabilizing the grid if it's not taken. And this is just growing and growing as more areas are trying to rely on increasing renewable energy. So in order to solve this, we need more customers in those rural or remote areas where there aren't really other customers. And Bitcoin mining can be one of those customers. And it is in fact being done. This is a use case that was also described by ERCOT. That's the grid operator of the Texas energy grid. So this was done in collaboration with Lancium that I mentioned earlier, and Sean Connell from Lancium also reviewed the report as well, along with Daniel. So massive thanks and shout out to him as well. So they essentially made this use case to explain what it is that they are doing here. Now, very briefly, the Texas mining grid needs to operate at about 60 hertz. So that is the blue line that you can see here. It needs to always be at that level of stability, and helps you to understand what I was trying to say earlier, that you cannot just dump the oversupply, or you cannot keep it on the grid, because then you destabilize it. So sometimes either it will peak upwards and then they need to get rid of the energy somehow, or it will drop and then they need to ensure that there's less demand for a bit in some kind of way, or more generation essentially to cover for that. So that is where Bitcoin mining can come in. And this use case essentially shows how here all of a sudden the grid frequency dropped below 60 Hertz. And then their system told the Bitcoin miners on the grid there, please stop mining. We need you to power down. And in this case, 12,000 miners went offline at a moment's notice to then recover back to the level where it needed to be. So the active power consumption lowered from 150 megawatts to less than 100 megawatts in seconds. So that is how flexible the system can be. No other customer can do this, can just shut off at a moment's notice and save this much energy. So that's where Bitcoin mining is tremendously valuable. And then eventually mining restarted again, and like things stabilized further from there on out. So this is just a system that reacts to that, and that's what they're working with. So super fascinating use case from them. That shows how this is being done in practice already and could be integrated by any energy grid operator in the world if they sort of took some time to look into this and to work with local partners that are interested in doing this. So another example here is from Gridless. They are a recently funded renewable energy. They're sort of focused on generating more renewable energy in Africa, in various regions. And it's a video that was made by Miles Suter. So you can see here in the video that they have several mining rigs here at a remote power plant, sort of remote power plant in Africa, which is powering a village nearby. So they have a hydro plant here. It generates a lot of electricity, but again, there's a peak and there is a trough in terms of energy generation. So by using Bitcoin mining, they help to lower those costs again for the local community by helping to pay off this project more easily and by taking more energy off the market when it is available, sort of taking more energy out of the generation when it is available. So that's again one of those projects, and they're starting to set up a lot of these projects around the continent there. It's a really interesting company to pay attention to. This is not just something that's happening in the most developed countries in the world with the best energy grid, so to speak. This can happen anywhere for anyone. Absolutely fascinating development. So finally then, the last part that I want to discuss, the hurdles to reaching a zettahash. What could stop us from getting to that big milestone? The first one, US legislative changes to Bitcoin mining. So we've already seen this with China, as I mentioned before, where they briefly banned Bitcoin mining. And you can see the red here, the percent of the global hash rate that was done by China used to be really big, or that emerged from China. And then it sort of disappeared for a while, but it has since grown back to about 21% earlier this year, so in January. There hasn't been an update in the data ever since, because it's also really difficult to tell if these miners are off-grid, where exactly they're located. You need to get in touch with them, they need to report accurately and honestly. Not everyone wants to have people inspect their mining operations because they could be using methods that are more efficient, smarter, there could be competitive advantages. So this doesn't always get publicly shared. So pretty difficult data to come by. And this was also from the Cambridge Center of Alternative Finance. So it kind of shows like the evolution over time, but China hasn't, like, there was an attempt to ban it, but it didn't really work out. Now, if the US would do something similar, is the point that I want to make here, then we could see a sort of a slowdown in hash rate growth. You remember that trough earlier where the hash rate dropped off. If the United States was really strict on their laws around Bitcoin mining, made it really difficult to do, then it could be that a lot of miners want to relocate again, that people are a bit uncertain about investing in the industry again, because maybe other countries will follow. So that could slow down the hash rate growth quite a bit. Now, there was also this report, on the other hand, by the White House on climate and energy implications of crypto assets in the United States, published in September. Unfortunately, there's quite a lot of sort of basic flaws and errors in there, so I would actually recommend you to read Nick Carter's comments on this report, where he debunks a bunch of the things, provides some better sources and data. to sort of explain like what is actually an accurate view of how things are going. This was a little bit disappointing in some way, the report, but one bright side of it was that they did acknowledge what I was just talking about, the methane that was mentioned in here. They have a section on this in the report. So crypto asset mining can be powered by stranded methane and renewables. They sort of briefly explain how this works, how much can be reduced by doing this. And in essence, they say in the report, crypto asset mining that installs equipment to use vented methane to generate electricity for operations is more likely to help rather than hinder US climate objectives. And they're still saying like, yeah, we should explore other methods as well to capture and store methane. But yeah, like that, that could take quite a while to get anywhere, and there's really not much proof out there that that's going to scale faster and solve more problems. So they're definitely acknowledging that specifically Bitcoin mining, because that's just where mining is a big industry, that's going to be something positive for this development. So that's at least a bright side of the report, I think. Just wanted to highlight that here. So second reason could be that there are geopolitical tensions between the US and China that make it really difficult to get the mining rigs that are largely manufactured in China by Bitmain, MicroBT, and Canaan Singapore based. But a lot of them get their chips, etc., from just a handful of manufacturers. It could be that if there's major tensions there, that it becomes really difficult to ship all those miners over to the biggest market, which is the US. Intel is only since recently getting into the mining game and still has a lot of ramping up to do there before they're at the scale of the competitors here. So these are some of the biggest companies that are now still active. And it could be that if there's a lot of friction there, which we've started to see emerge, that it becomes difficult and thus it slows down the hash rate growth. So we're seeing these chip wars emerge essentially since October this year, where the US has been taking actions to prevent people from the US from working in the chip industry in China. They've been doing all kinds of things like not exporting chips of certain efficiencies anymore. And this is just starting to ramp up. And it could be that China just sort of answers in kind and says, okay, well, then we don't export any more chips to you guys either. And then it could be that the supply chain to get mining rigs out of China to the US, for example, or to other countries becomes really complicated, becomes more costly. That could slow down hash rate growth as well. Last one then, and I'm almost wrapping up here, the energy crisis that is ongoing in Europe in general, but also in a lot of other countries in the world. Could that be a factor to slow down growth? And in short, I'd say not really, because again, miners operate in areas where this already isn't really that much of an issue. Some miners could definitely be affected, but in general, miners will continue to search for places like this, and especially these, to set up their mining operations. They're not going to be in the areas that are most affected by energy crisis, which are the ones with energy scarcity in general. So not too worried about that one slowing things down. So that's it. That's the video. That's the report. Quite a lengthy video, but there's just a ton in there. I hope you find it interesting. I'd love to hear your feedback. If you watch the whole thing, super appreciated. Thank you very much for your interest. And if you found it interesting, if you think there's anyone in your network that could benefit from watching the video, from reading the report, please do share it. Any bit that we can do to help make the world aware about the valuable use of Bitcoin as a tool to improve energy grids, etc., to improve our transition to renewable energy, to help the planet, etc. Everything much appreciated. That's really been the goal of this report. If you'd like to see more from River, check us out. We have a newsletter, etc. We're on social media. So hope to see you there, and thank you for watching.